If you were born before 1961, the day you turned 65, you became legally exempt from a whole category of bills and taxes. You are almost certainly still paying right now. And not one person whose job it is to collect that money is going to call you up and tell you to stop sending it. I want to sit with that for a second because it is the most expensive misunderstanding I see year after year. Turning 65 did not just make you eligible for Medicare. It quietly moved you into an entirely different legal category, a category where federal law, your state, your county, and several other agencies are required to treat you differently. There are bills that younger people owe that you no longer owe. There are taxes that shrink, freeze, or disappear the moment you cross that line. But here is the catch that costs people thousands of dollars every single year. Being legally exempt and actually not paying are two completely different things. The law does not automatically send you a refund. The county does not mail you a check on your birthday. The agency that has been collecting from you for 40 years does not write you a letter saying, "Congratulations, you can stop now." You have to know the exemption exists, and you have to file the form. That gap between qualifying and actually receiving is the reason most people who are fully entitled to this money never see a single dollar of it. And before you decide this video is not for you, let me knock down the biggest myth right now, because this is exactly how people talk themselves out of money that has their name written on it. Some people assume a list like this is only for low-income retirees who are really struggling. So if they have a comfortable paid-off home, they tune out and figure none of this applies to them. Other people assume the opposite. They think this is only for the wealthy, people with big estates and sophisticated accountants. So if they live mainly on Social Security, they tune out too. Both of those people are wrong, and both of them are walking away from money. Some of what I am about to show you helps low-income retirees the most. Other pieces are most valuable to the person who owns a home that has doubled in value over the last several years. For each one, I am going to tell you exactly who benefits most, so nobody watching can honestly say that part is not for me. And if you are renting, do not go anywhere, because one item on this list quietly controls how fast your rent is allowed to rise. Now, before we get into all 5 of these, I want to point you towards something that goes deeper than what any single video can cover. What I am walking you through today, the tax deductions, the property tax exemptions, the Medicare programs, the withholding adjustments. These are exactly the kinds of traps and opportunities covered in the Hank Sullivan Retirement Protection Pack. It is a serious resource built for people in your exact situation. And you can get to it 2 ways. The link is right there in the description below this video, or you can scan the QR code on your screen right now. No pressure, no sales pitch. It is simply there when you are ready to go deeper, because here is what I have not shown you yet. The 5th item on this list is the one I am asking you to stay for until the very end. It is the highest dollar item of all 5, and it also happens to be the easiest fix that is coming. Let's start at the top. Number 1 is a brand new federal tax deduction that went into effect for the 2025 tax year, and because it is so new, almost nobody has taken advantage of it yet. That is exactly why people are missing it. Starting this year, every American over 65 is eligible for an additional $6,000 deduction on top of the standard deduction they already receive. I want to be precise here because people get this wrong. This does not replace your standard deduction. It stacks on top of it. $6,000 removed from your taxable income simply because you are 65 or older. And if you are married and both you and your spouse are 65 or over, that is $6,000 each, $12,000 as a couple, on top of everything else you already get. This applies whether you take the standard deduction or itemize. It does not matter how you file. The deduction runs through the 2028 tax year. Now, it does begin to phase out at higher income levels. If you file individually, it starts shrinking once your income passes $75,000. For a married couple, it phases out above $150,000. Above the upper limits, it disappears entirely. But think about who that leaves in. The vast middle, the retiree living on a normal, modest income. For that person, this is real money subtracted directly from what the government is legally allowed to take from them. Here is what frustrates me about this one. The people it helps most are the exact people least likely to catch it. The senior over 65 living on a normal income who files a simple return or hands it off to a basic preparer who is moving quickly through a stack of returns. That person will never notice if this new deduction was not applied, and they will overpay in complete silence. So the action here is simple and takes 2 minutes. Before you sign your tax return, confirm that the senior additional deduction was applied. If you use tax software, make sure your date of birth was entered correctly, because that is what triggers it. This is not a fight with anyone. It is one line on a form. You just need to make sure it is there. Number 2 is your property tax bill. This is where the largest amounts of money on this entire list are hiding, so pay close attention, because there are actually 3 separate forms stacked on top of each other here, and most people do not have any of them filed correctly. The first is the Homestead Exemption. What it does is remove a significant portion of your home's value from the taxable calculation before the county even figures out what you owe. In Florida, that is $50,000. In Texas, it is a $100,000 reduction on the school district portion of your bill. Every state is different, but in almost every one, this is real money. And here is where people get caught. Most homeowners assume this is automatic. In most states, it is not. You file a one-page form with the county one time, usually before a spring deadline. File it once, and in many states, it stays in place as long as you own the home. Skip it, and you pay the full bill for no reason. The second form sits right on top of the first. It is the 6-5, or older exemption. Most states that offer a homestead exemption also offer an additional one that kicks in the year you turn 65, and this is the one the county almost never mails you notice about separately. It is a completely separate application, and you have to ask for it by name. In Texas, homeowners 65 and up get an extra $10,000 reduction on the school district portion beyond the homestead. In Florida, the senior exemption can be an additional $50,000 on top of the base 50, doubling the deduction. And this is where comfortable retirees incorrectly tune out. They hear the word senior and assume there is an income test they will not pass. But in more than half the states that offer this, there is no income requirement at all. Texas, Florida, Georgia, Tennessee, Alabama, and others. You turn 65, you file the form, you get it. Age is the only requirement. The third form is the most valuable of all 3, and it is the senior assessment freeze. Here is what it does. When you turn 65 and file for the freeze, the county locks your home's taxable value at whatever it is the year you apply. From that day forward, it does not matter how much your neighborhood gentrifies. It does not matter how much prices rise on your street. Your taxes are calculated on that fixed number. In Texas, once you apply for the over 6.5 tax cap, your school district tax bill is frozen at the actual dollar amount you paid that year. Your home can double in value, and the bill cannot go up. Who does all of this help most? Honestly, everyone. The basic homestead exemption helps lower income owners the most in percentage terms. But the assessment freeze is worth a small fortune to the person who owns a fully paid off home whose value has tripled over the last several years, because those are the people facing the biggest increases. And renters, I told you this was yours too. Here is why. Your landlord pays that property tax and passes every dollar of every increase straight to your rent. When those bills are frozen or reduced across an entire community, rents stop climbing at the rate they have been. Social Security and tax rules change every year, and nobody from the government calls to explain what those changes mean for you personally. That is exactly what this channel is here for. Subscribe and turn on the bell so you do not miss it. Number 3 is your Medicare Part B premium. This is the amount quietly deducted from your Social Security check every month before the money ever reaches your account. That is why a lot of people forget they are even paying it. In 2026, that premium will be around $185 a month, pulled out automatically. But here is something almost nobody knows. There is a group of programs called Medicare savings programs. If your income falls below the threshold, your state will pay that Part B premium for you. Not reduce it, pay it entirely. There are 3 tiers identified by the initials QMB, SLMB, and QI. The most generous level, QMB, does not just cover the premium, it also eliminates most of your deductibles and copayments. Here is what really gets me about this one. The income limits are much higher than people assume. A lot of people see the word and decide they earn too much, when in reality they would qualify, and in several states, assets are no longer counted, so your savings or your paid-off home do not disqualify you. Despite all of that, this is one of the least used benefits in the entire system. Millions of people who qualify right now have never applied simply because nobody told them it existed. Who does it help most? Anyone living primarily on Social Security. This one is critical for you. The fix is a single phone call. Call your state's free Medicare counseling program, sometimes called a SHIP office. They are free, They will help you figure out if you qualify, and they will walk you through the application. That one call can save you close to $200 a month on your check. Run that out over a full year and do the math yourself. And while you have them on the phone, ask about one more program in the same family, because it usually goes hand in hand. It is called Extra Help, and some people know it as the Low Income Subsidy. This one covers something different. The cost of your prescription drugs under Medicare Part D, if you qualify, and many people who qualify for a Medicare savings program also qualify for this, you can dramatically reduce what you pay for your medications, your drug plan premium, and your deductible. In many cases, getting approved for a Medicare savings program automatically enrolls you in Extra Help at the same time. So that is two of the biggest healthcare cost savings in the entire system, both unlocked with one phone call and one application. For someone taking multiple prescriptions every month, this is not pocket change. It can be one of the most valuable benefits on this entire list, and it is included in the call I just told you to make. Number 4 has a smaller dollar amount than the others, but it is still a bill you are legally entitled to stop carrying, so I am not going to skip it. There is a federal program that takes roughly $9.25 off your monthly phone or internet bill, and many states add their own discount on top of that. And if heating or cooling your home is a significant strain on your budget, there is a separate federal program that helps pay utility bills directly for qualifying households. I will be straight with you. $9 a month is not going to change your life. But here is how I want you to think about it. It is one more recurring bill that the system already decided people in your situation should not have to carry alone. It goes unclaimed for the same reason everything else on this list goes unclaimed. You only get it if you ask. And when you stack several of these together, the small ones alongside the large ones, that is when the monthly number really starts to move. Which brings me to number 5, the one I asked you to stay for, because this is the item that has silently cost more people more money year after year than anything else on this list, and it is also the easiest fix of all. Remember that new $6,000 deduction I told you about at the top? The tax code also gives every taxpayer over 65 a second completely separate additional standard deduction that has been in the law for years. It stacks directly onto the regular standard deduction that everyone gets, and now it also stacks with the new bonus. When you add it all together, the regular standard deduction, the long-standing senior add-on, and the new $6,000 deduction, a significant number of Americans over 65 owe far less in federal taxes than they believe, and a meaningful portion of them owe nothing at all. But here's the silent trap. Those same people are still having too much withheld from their pension or their Social Security out of habit. Or they are handing their taxes to someone who never stops to adjust the calculation based on their age. And so they hand the government a interest-free loan every single year and call it normal. In my view, this is the single most common and most fixable financial mistake that people over 65 make. The tax code is not hiding this from you out of cruelty. It is simply that no part of the system is designed to walk up to you and explain it. The simplest move you can make is this. When your return is prepared this year, confirm that both your regular standard deduction and your additional over 6.5 deduction were applied. Then ask whether your withholding should be adjusted going forward so you stop overpaying every single month. Not a battle, just a checkbox that needs to be marked correctly. Now, let me share a few things for the person who has some real assets, because for the right person, these are worth more than everything else on this list combined. The first is property tax deferral. In several states, once you reach a certain age, you can stop paying property tax entirely while you live in the home. The state simply handles the payment later when the property is sold or passed to your heirs. You keep your cash flow now. The second is the surviving spouse carryover. When one spouse dies, the senior exemptions and the assessment freeze do not automatically transfer in many places, and families lose them by accident at the worst possible time. But if the right paperwork is filed, the surviving spouse can often keep the deceased spouse's exemption intact rather than watching the tax bill jump in the hardest year of their life. The third one people dismiss until they run the numbers. In several states, once you reach a certain age, your vehicle registration or annual road tax is reduced or eliminated entirely. Small amount each year, but it is your money and it is sitting there. Let me bring this back to where it started, with a real person. I once worked with a woman I will call Margaret. She was 72 years old, living outside Toledo, Ohio, widowed, owned a paid-off home that had quietly doubled in value over the years, living mainly on Social Security and a small pension. When we sat down together and looked at her situation, here is what we found. She was paying the full Medicare Part B premium every month. She was paying the full property tax on a home whose value had been climbing for years with no freeze in place. And she was paying more in federal taxes than she actually owed because her tax preparer had never applied the senior deductions or adjusted her withholding. 3 things happening at the same time, and every single one of them was something she had the legal right to stop. So we filed 3 forms: an application for a Medicare savings program, the senior exemption and assessment freeze with her county, and a corrected tax return. Nothing changed in Margaret's life. She did not move. She did not sell anything. The only thing that changed was how much money was left in her account at the end of each month. And here is the part I want you to really hear. She was not gaming the system. She was not getting away with anything. She was simply finally claiming what she had already earned over a lifetime of doing everything right. That is exactly what I am here to help you do. Being legally exempt and actually keeping the money are 2 different things. The only bridge between them is the form. The agencies are not going to build that bridge for you. So here is exactly what I want you to do this week, and none of it will cost you $1. First, call your county assessor's office and ask them by name whether the homestead exemption, the senior exemption, and the assessment freeze are all on file for your property. If any of them are missing, ask what form you need and what the deadline is. Second, call your local SHIP office and ask them to run a free eligibility check for a Medicare savings program. Third, the next time your tax return is prepared, confirm that your senior deductions were applied and ask whether your withholding needs to be adjusted. And if the cost of paying someone is part of why you have been putting this off, listen carefully, because you do not have to pay anyone. There are 2 free programs staffed by trained IRS certified volunteers. One is called Tax Counseling for the Elderly, and the other serves the same population through an AARP partnership. They will sit with you and help you file for free, and they know exactly which senior deductions to look for. For most of you, the cost of getting all of this right is 0. That is it. A few phone calls and a couple of forms stand between you and money that has belonged to you all along. I want to be clear that what I have shared today is general information, not personalized legal or tax advice, and these rules do vary by state and income level. Always confirm your specific situation with your county office, your state SHIP office, or a qualified professional before you act. If this video caught you off guard, there is another one right here on the channel that goes deeper on property tax forms state by state. Same kind of money, same kind of silence, and the card to get there is on your screen right now. If anything here helped you, do me a favor. Send this to one person you know who is over 65. It will not cost you anything, and it could put hundreds of dollars back in their pocket every month. And drop a comment below and tell me this: which one of these 5 did you not know about before today? I read every single one. See you in the next video.